If your business needed $20,000 tomorrow, could you get it without touching your personal credit? Most business owners can't, which can be scary. And if you don't have business credit yet, you're basically running your business with one hand tied behind your back. No real business credit cards or serious funding. And if something goes wrong, your personal credit takes the hit. Hey, I'm Nikita from Collective, and we are all about helping solopreneurs build smarter businesses. And in this video, we're going to walk you through the 4 exact steps to take to build business credit fast. And stay with me because step 3 is where most people drop the ball, and honestly, it's the easiest one to fix. The good news is, building business credit, it's not complicated. It's just a specific set of steps to take in the right order. Let's start with the basics, because a lot of solo business owners think that business credit is something only big companies need to worry about. It's not. A business credit score works a lot like your personal credit score. The major bureaus track how your business interacts with credit and debt, and then they use that information to give your business a score. Here's one key difference though. Personal credit scores run from 300 to 850. Business credit scores run from 0 to 100. And obviously you want to be as close to 100 as possible. That score tells lenders, suppliers, and vendors one thing: can this business be trusted to pay its bills? And here's a few reasons why that matters for you specifically. Firstly, it separates your personal and business finances. Strong business credit means you're not putting your personal credit score on the line every time your business needs financing. Second, it unlocks capital, whether that's equipment, software, hiring a contractor, or covering a slow month. Business credit gives you options when you need them. And third, it can get you better terms with vendors. Net 30 accounts, longer payment windows, lower deposits. A lot of that becomes negotiable when your business has an established credit profile. Like, a supplier that normally expects payment within 30 days might stretch that to 45 days for a business with strong credit. That kind of flexibility can make a real difference for your cash flow. The earlier you start building it, the better, even if you don't need financing right now. So, what actually moves the needle on your score? Lenders look at a few key things. The age of your business, and older is better here. This is actually one way business credit differs from your personal credit. Your company's age directly factors into the score, not just the age of your accounts. Recent applications for credit. In this case, fewer is better. Similar to your personal credit, every time you apply for a new line of credit, it can ding your score. So be strategic. Your credit utilization, or how much of your available credit you're actually using. Keep balances reasonable and don't max things out. Collections or tax liens in the last 7 years. Now these will really hurt, so try to avoid them at all costs. And of course, your payment history. This is the big one. On-time payments are good, though early payments are great. Those are even better. Formula is a little different from your personal credit, and your industry can actually factor in here too. Some industries are just statistically riskier than others, and that can influence your score, even if your payment history is spotless. Okay, let's get into the actual steps. And step 1 is critical. You need to set your business up as a legal entity, either an LLC or a stock corporation. A sole proprietorship won't work here because it's technically not a separate legal structure. Business credit is tied to your business as a separate legal entity, not to you personally. That separation is the whole point. Once that's done, here's your setup checklist. Get an EIN. That's your employer identification number. It's basically a social security number for your business, and it's what ties your business credit to your company rather than your personal social security number. You can get one for free at irs.gov in about 5 minutes. Then open a dedicated business bank account. No more running business expenses through your personal checking. Clean separation between personal and business finances is essential, both for credit building and for tax time. You can check out our recent video on the best banks for solopreneurs if you need a little help choosing a bank. Get a business phone number and a dedicated business address. I know this sounds minor, but it actually matters. The business credit bureaus verify that your business information is consistent everywhere it appears. Inconsistencies can slow the whole process down. Then register with Dun & Bradstreet to get your DUNS number, a unique 9-digit identifier that a lot of lenders and vendors use to pull your business credit profile. It's free and you can grab it at dnb.com. Step 2 is where you actually start building credit history, and the fastest way to do this is through vendor accounts, also called trade accounts or net 30 accounts. These are suppliers that let you buy now and pay within 30 days. And importantly, they report those on-time payments to the business credit bureaus. That reporting is what builds your profile. Some beginner-friendly options include Uline, Quill, and Granger. These companies are known for working with newer businesses that don't have an established credit history yet. The key here is simple. Buy something small, pay early. Repeat, every on-time early payment is a positive mark on your business credit report. Once you have a few of these accounts reporting, you'll have enough of a foundation to apply for a business credit card. And that's where things start to accelerate. A business credit card is one of the best tools for building business credit, especially if you already have decent personal credit. Use it for regular business expenses, pay the balance in full every month, and your score will grow steadily over time. Two important rules here though. Don't max it out and don't miss payment. High utilization and late payments are the fastest ways to damage a score you've worked really hard to build. Now here's the third step, the one I mentioned earlier that most people skip. Once you've started building credit, you need to actually monitor it. Hear me, monitor it. Equifax, Experian, and Dun & Bradstreet, they all have separate business credit profiles, and they don't always have the same information. An error on one bureau's report that you don't catch can quietly drag your score down without you even knowing. Check your reports regularly. Look for accounts you don't recognize, inaccurate payment histories, or outdated information. If you find an error, dispute it directly with the bureau. This is also why consistent business information matters so much. Your business name, address, phone number, and EIN should be identical everywhere. On your website, your invoices, bank accounts, everywhere. Inconsistencies confuse the bureaus and can cause legitimate accounts to not get reported correctly. Okay, real talk. You're not going to build strong business credit overnight, but you can make meaningful progress faster than most people think. By starting with a few net 30 companies and a business credit card and making consistent on-time payments, you can have the beginnings of a solid credit profile within a few months. Remember, the age of your business will always be a factor, and there's nothing you can do to fast forward that. But everything else is in your control. Your payment history, utilization, and consistency. Focus on those and the score will follow. But I said earlier there are 4 steps. Step 4 is to zoom out and look at the bigger picture. Building business credit doesn't happen in a vacuum. It's connected to everything else in your back office. That means your bookkeeping, entity structure, tax filings, and payroll. Clean books make it easier to qualify for financing. The right entity structure affects how lenders see your business. Staying on top of tax filings means no surprise liens that tank your credit score overnight. This is exactly the kind of thing Collective was built to handle. We set up your entity, keep your books clean month to month, handle your payroll and tax filings so that when you need to leverage your business credit, everything behind the scenes is already in order. So let's recap. Build business credit fast by getting your legal foundation right first, opening vendor and credit accounts that report to the bureaus, paying early and consistently, and monitoring your reports so nothing slips through the cracks. If this was helpful, be sure to give it a like and subscribe for more content like this. See you in the next one. Bye.